In this video, we explain what an executor bond is, who needs them, how much they cost, and how claims are avoided. At a glance, the limit on executor bonds are determined on a case-by-case basis. Each state has specific statutes outlining how the limits on executor bonds are determined. The bond amount will typically be equal to 100 to 200% of the estate's personal property value. The bond is required for certain executors and administrators handling the estates of deceased individuals. We will go into more detail on who is required to purchase an executor bond later in the video. Local probate courts regulate executor bonds based on laws written by each state's legislature and are generally afforded a considerable amount of discretion when doing so. So, what exactly is an executor bond? An executor bond, also known as a personal representative or a fiduciary bond, is a government-required surety bond that protects estate beneficiaries and creditors from a financial loss if the executor or administrator violates their fiduciary duties. For example, if an executor is negligent in handling the estate's assets, the beneficiaries and creditors can file a claim against the executor's bond to recover any losses. So who needs an executor bond? Certain executors and administrators must purchase an executor bond as a prerequisite to obtaining a fiduciary appointment over the assets of a deceased individual's estate. All 50 states and the District of Columbia require certain executors and administrators to be bonded. Each state has specific rules for when an executor bond must be obtained. In general, executor bonds will be required when the will requires one or does not specify that a bond is not needed. An interested person petitions the court to require one. All estate beneficiaries do not agree to waive the bond requirement. The executor lives out of state or is replacing another fiduciary. Or the court determines a bond is necessary. Now we'll go over how much executor bonds typically cost. Surety companies typically determine the premium rate for executor bonds based on a tiered structure. As a result, larger bond amounts will be charged a lower premium rate than smaller bonds. Here is a quick snapshot on the premium rate structure for executor bonds. Viewers are encouraged to pause the video here or visit the link to our comprehensive guide located in the video description. So how can executors avoid claims against their bonds? To avoid claims against their bonds, executors and administrators must follow all state regulations pertaining to their appointment. Best practices for avoiding claims includes giving the court a complete inventory of the estate soon after their appointment, delivering periodic reports to the court on their administrative activities, paying all taxes that may be required, distributing all property owed to estate beneficiaries and creditors, and to not mismanage the estate's assets. So how can an insurance agent obtain an executor bond? Bond exchange makes obtaining an executor bond easy. Insurance agents simply need to visit bondexchange.com or call us at 800-438-1162 to speak to one of our friendly underwriters. Because at Bond Exchange, we make surety work for you.